Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a look here at Zilliqa, see what's going on, of course, in this monstrous, momentous trend, and help understand best practice and big picture. If you're new to the channel, not a financial advisor, just love teaching people how to trade, I hope you can learn something here today. CryptoCache.tech is the website if you want to become a better trader. I have an academy, a community, and signal group that I send out for every single trade that I take. Take a look here at Zilliqa. So let's go ahead and start and preface with the simple fact that we are seeing the price push really hard. Okay, now obviously we're up above both moving averages, so those are positive, but the thing we can't avoid is how high this is right now. RSI over 90, that is extremely overextended. For obvious reasons, we can expect a pullback soon, and as you can see, of course, there has already been somewhat of a pullback. Now we'll look at Fibonacci retracement levels here. I drew this out from the most recent high to the most recent low. Coincidentally, the price maxed out right there at 12.5, exactly the same place in which it stopped out last time. Okay, so that's obviously a key level resistance. Taking a look at the 4 hour though, we can go ahead and see if this is a healthy continuation. I would say unhealthy in the general sense of way too high, way too quick. But increased volume does breed increased results and some interesting behavior. We can see that here with Zilliqa. And why don't we take a look at some of the other stuff here. RSI well over 70 on the 4 hour as well. Big surprise there, hit 95 and came back down. So generally speaking, when you see an RSI over 70, the common rule of thumb is to wait for it to come back down in order before you sell, because at that point, it can either work as a support or resistance. What I'm referring to is 70 on the RSI. Right now, we're well above that, and I would expect potentially even more of a larger pullback, depending on the overall sense here. Again, that's just what traditional trading should do. In other words, traditionally, when you have an overextension like this, you're at a 9, for example, you should expect a pullback and a correction soon. What's nice is this 9th candle, of course, did effectively pull back, so that does help. But it does show this that in the last 36 to 42 hours or 36 to 44 hours, whatever the case is, we're looking at essentially a decent pullback, but a significant increase from the get-go, okay? And this was not enough consolidation, even though it's very helpful. That was probably only about 10, maybe 8 to 12 hours worth of consolidation, and then it legged up again. So just note, it is still overextended. The likelihood of a pullback is greater, or keep this in mind also, the likelihood of going sideways is also there too. It doesn't necessarily have to pull back because of that. I mean, obviously it pulled back based on that resistance level being there. It'll likely test 12.5 again though. You got to keep that in mind. This does appear to be a strong momentous push. A significant amount of volume increase as well explains why it's sustaining its level. Okay. So again, if you start to see diminished volume, then at that point you'll start to see the price come back down. Okay. But if the volume can maintain itself, then we're probably going to be looking just fine. All right, so again, good stuff there in that sense. Even though it's extremely overextended, this is a traditional, like a typical continuation type of pattern. I'm not surprised that it's holding and maintaining this way. So let's just go ahead and draw something out here just in case for future reference. I'll cover this again here soon. But generally speaking, this trend line that we're seeing here, if it can continue this and maintain this, we'll expect it to break to the upside here in the next probably 12 to 24 hours. Okay, so it's going to potentially push and continue upwards. It could, if in fact it does lose this continuation pattern, come back down, we could expect 9 cents as a rough estimate for the next key level support, or somewhere potentially right around 10 cents based on the fact that was a resistance previously. But generally speaking, we'll see somewhere between 9 and 10.5 cents as the likely support channel here if it were to come back down that far. The likelihood of it coming down that far is honestly 50-50 at this point. This is way too high, way too fast, but it's also a good healthy continuation with a lot of volume. I know it seems contradictory and it's like, well, there's no definitive line in the sand, right? But generally speaking, it's looking very good in that overall sense, and I would probably take the momentum play over the likelihood of a continuation to the downside based on the increased amount of volume. All right, so again, that's just kind of what my thoughts there. If we take a look at Ishimoku Cloud, of course, it pretty much tells us, hey, don't touch this. The likelihood of it continuing higher is still there, so just go ahead and leave your position open. Another thing to note as well is on TD sequential for the 1 hour, we're at an 8, and we're about to get a reset here potentially soon, as long as the next candle doesn't get any higher than 12.9. So I really foresee the price going either sideways at to consolidate around 10.5, or potentially upside to break 12.5 cents again. But you got to keep in mind, it'll probably have to test that a couple of times. Okay. And if you kind of look at the big picture here, let's see. Yeah, I mean, it's just significant increase there. Normally, I would like to say pump the brakes. What I recommend here, though, in this case is potentially taking some profit, maybe not all, just a little bit to kind of make sure to help if it does pull back. You took some money out, but the likelihood of it continuing higher at this point, based on the amount of volume, is still equally as great. So again, I think more likely sideways or up at this point, because this pullback that it's had so far is also it's necessary, but it also helps too, right? So again, big picture, I think Zilliqa is looking good, but generally speaking, this is if we see a third day. Oh, here's something to note too. If this continues, just say higher for day number 3 tomorrow, then you can expect the day after to probably be pretty significant to the downside. That's when you want to caution yourself, because if you see 3 solid green days in a row, then the 4th is typically always red. Okay, so just some future reference there. We're still really early there. Nothing to really truly worry about, but it doesn't feel like it's going to pull back as hard as you would expect, based on, again, the volume. That's the most important thing. If you start to see the volume dissipate, then you're going to start seeing more selling pressure, and the price will probably continue sideways or down. This is also probably likely a fundamental catalyst too. So of course, do your own research. I'm not invested in Zill, so I don't technically know what happened, but when you see an increase of this magnitude, the likelihood of it being news related is quite high. So I would say do your research and see what happened there. If you do happen to know what happened, feel free to comment below so we can all learn and grow together. That's the whole point of my trading community, right? Make sure you become a better trader. So check that out in your own time. Once again, CryptoCache.tech. And in the meantime, I hope you have a great rest of your day. Really do appreciate your time here. We'll look forward to seeing you in the next one. Take care.